Hello everyone. So I want to do a daily review today, more personalized on my own trading and the trades I took and what I saw at the time. And then the weekly reviews will be a general sort of overview of how price traded, all after the fact, not necessarily as I saw it. But I took this trade today and it did stop me out, right? So I had this position on and my stop was really tight, but I didn't want it to come back down beneath this consolidation. And so I thought that if I had my stop beneath this fair value gap, that it would be enough, and that price would find resistance in this fair value gap, the order block here, and then that fair value gap, and it ended up going beneath all that into the rejection block. Happens when you trade on Mondays ahead of all the high impact news. That's why I usually don't trade Monday unless there's news. But yeah, this is a trade after it played out. You see, I got wicked. Is unfortunate, but I had to sit there and watch the play go higher. But I made some bad decisions after this run higher occurred. So I was aiming for those highs, and when we came above those highs, in my head, at the time, I see a down close candle and then another down close candle. And I start to think like, oh, it might retrace even lower now back to a discount, and then I try and come up with all these trade ideas that aren't logical. It's the gambler in the seat and not the trader, not the analyst in the seat. It's just the gambler trying to have a quick gratification instead of delayed gratification. Instant gratification is what I was looking for. The only thing I could think of is how do I make this back? How do I make my money back? Uh, Instead of being patient and waiting for another opportunity, maybe in a couple days or next week, I tried to trade inside these candles, and I was conflicted between it going lower or higher. I knew it would go higher, but I was like, it's illogical to get in at this high of a price. So I ended up uh, losing money, not being able to make up my mind on each of these down moves, and eventually I was using more and more leverage, and it turned bad, and I lost the account. So I lost an account today. And after I lost the account, I went to the gym. I played some basketball. I did something else, and I felt better afterwards. And when I got back home and I looked at, the calendar and all my trades this week, um, I was surprised because in the moment, this isn't anything. So in the moment, I was thinking about the loss. That's all I could think about, and I hadn't taken a look at this, but I didn't actually. I forgot that I only encountered, this was only my second loss this month, right? So it wasn't all that bad. If I look at this trading calendar so far for this month, this doesn't look that bad at all. Like, this looks pretty nice. It looks pretty responsible. And I was actually kind of relieved looking at this to realize that I really just freaked out for no reason. That I let my emotions at the time get in front of me. And I was trying to see things that weren't on the chart at all. But I'll walk you through exactly what I was thinking thought by thought while it's still fresh, um, as price is printing, and then you'll see what happens after that loss, right? So anyways, I had the minute open here, on my chart, and I was expecting price to run higher. I noticed how we had found support at this rejection block, got beneath the afternoon low from Friday, and so I was saying, okay, well, we could retrace right now because I'm seeing a little bit of resistance from this fair value gap. All right, on the hourly chart, you see that fair value gap there, and the one right here. However, if you go from low to high, you look at 50%. This fair value gap's a little bit in premium, so you can make allowance for the candle to want to seek lower. So there were different levels I was watching, which first we'll go through here, and then you'll see that it completely disrespects it. So that was a little bit scary, that how much lower it closed. But 9:30 open was coming, and anyways, I don't trade until after the first 15 minutes of open. There's still plenty of time until that, right? But there was 3 levels I was watching in discount. There was this order block there, that down close candle, 50% of that wick. So if you draw a rejection block from low to high, I always make mine purple. Oh, that's just how you know. No. I like to color code my PD arrays, but not always. It'll be the same colors, but most of the time, especially in the pictures I take, the screenshots. But yeah, you'll have the rejection block. 50% of the rejection block is constant encroachment. It's a wick in discount, so that was one level, and then there was this low, the X. I wasn't necessarily looking for the X, but it was a possibility in mind because we had already sort of taken the sell side liquidity, and I had already seen this run on short-term stops that I wanted to see before looking for trades. But anyway, we come down a little bit. We close beneath that order block, and we come down to the constant encroachment. This is right ahead of 930, and 930 opens up. It made an initial run all the way up here, found rejection on that fair value gap, which is I refined it from the 15-minute to the 5-minute, but you can look at it like this on the 15-minute. I'm going to make all my PD arrays gray now for the sake of the video. Right, so this was a little scary, right? We formed an order block, but I was looking at price action as the candle was, for the most part, the candle was trading up here, and imagine the candle just being high like this. Like I was looking at this order block, and I wanted to see that candle close up there, then 945 come back, hit it, and then run higher. That's what I wanted to see, but instead it came all the way down. It still formed the order block, but it was a little scary, the big wick, and it was indicating that we were going to have a lot of trouble making our way to these highs. We were going to see a lot of retracement, a lot of consolidation. All right, so that should have been a hint to have a bigger allowance for more drawdown. But we obviously retraced, headed down close candle, and now this is where I get into the trade on this candle. So I'm not seeing anything on the 5-minute that I like. There's that 5-minute short-term low, grab that 930. There's some short-term lows here, right? And there's not really anything that I really like. I do start to see the Dow at this time start to trade higher after it had traded lower, so that was good, and aligned with my bias. But I was watching this consolidation and price kind of create that up close candle, and I wanted this to be the swing low that respects that we no longer trade beneath, and I was right. So what I should have done is I should have had my stop all the way here, and I have my stops. Usually the most I'll have it is at 20 points, so I could have made allowance for that low, right? And then I could have looked to get in a little bit lower, like maybe on that volume imbalance, is what I could have done, and but I didn't do that, right? Instead, I had this really tight stop, and if you go on the 30-second chart, that's what I was trying to find, a fair value gap, a nice inverse fair value gap, and I was watching this whole range here, seeing it go lower. I was having a very hard time trusting the inverse fair value gaps because of that, again, high resistance that we were seeing ahead of 930. We didn't have that Judas swing, and so we were having a lot of high resistance liquidity runs. And so I was really waiting for a nice confirmation higher, a nice market shift, and we did have that market shift here, but instead price retraced a little bit lower, stopped me out, and then it started to trade higher from here. Well, it continued to consolidate for a little longer. But as I was watching price run up here, I couldn't believe that, it was going to leave without me. And I was watching price continuously running up, coming back to the order block, run up, come back to the order block, and ran up, came back one more time to the order block. And I was telling myself, like, I can get back into this. It's not over. It's back at beneath my entry. There's still a chance for me to get in. But, I didn't get in. I let it just do its thing, and eventually it ran up at around 10:17, right? And it went to the back to the midnight open. But as it ran up here, all I was thinking was I wanted to see a breaker, a turtle soup short. So I had this in mind, because even though this wasn't my bias going into the day, and I wanted to see it trade up to, on the hourly chart, I wanted to see it trade up to this fair value gap, and there was this light blue fair value gap I had in mind, which is a balanced price range. I wanted it to terminate up here. So even though that was in mind, I was still thinking, okay, well, I took a loss and now we're up into a premium. Where it's too late to buy it now, to trust buying it. It can retrace too much. So I'm going to try and make money off retracements. And this is where I kind of lost it a little bit. And I started to trade in both directions. And the more and more it started to retrace, and then retrace over here, I couldn't decide whether I should go long or sell. And each time I put a trade on, it was more and more leverage. And small 5 point, 10 point moves made me change my mind so many times that I eventually just blew the account, right? Which was very unfortunate. But that's when I knew that, I wasn't myself when I was doing that inside these candles. I was obviously not the trader that I most of the time am on the two videos I show. But I also have humility, so I'm also showing. I'm very transparent. I'm showing when I do end up being a gambler, right? So there's a lot of people that in my comments, if they still watch the videos, that said that one guy said I'm his end goal, right? As a trader, well, I'm not there yet as a trader. I'm a good analyst, but as a trader, I have still things I need to work on, and one of them is accepting the loss, right? Because like I mentioned, that monthly calendar, that does not look like a losing trader, not at all. But in the moment, I couldn't help to think that, well, it's the end of the world, and that's something that I'm still young and I have to work on. But yeah, those are my faults. But anyways, price continued running higher, and in the afternoon, as lunch, I let lunch play out, and then we didn't have that run down on this stop here. So seeing it come lower, I didn't try and make money from the move, try and make lower. But when I saw it, I didn't try and participate in the move to send it lower. But when I saw it hit the midnight open, I was watching this inverse fair value gap, and I saw this gap here initially. Price found some resistance, and the down close candle in it there too, more resistance, and then finally got above it. So I wanted to see if this would support price, and when it did get down into it, and it was real nice too, getting down into it. It created a short-term low that you could have used to turtle soup, right? Like it came down to midnight, initially touched it, traded higher, and then went back beneath that low one more time. If you go to the 1 minute chart, you see that initial move higher could have gotten some people long ahead of time, stopped them out, and then the smart money's buying here after the counterparty for the early longs is offered to them. Inside this gap, they're accumulating more, and then it runs higher from there. I was watching this inverse or valley gap, and this was all real time. I was seeing this on my phone, but I did not participate because obviously I had blown the account back here, so I didn't have an account to participate with. But price, I was done trading for the day. I didn't want to put in any more risk. But price closed above that gap, and then it continued to run higher. It did not come back. It did not retrace. Simply was very volatile. When you see that happen, when you see these breakaway gaps occur, expect a nice and easy run up to these highs, right? So as it initially attempted to retrace and found support, it continued to make new highs, and then it never really retraced to any sort of discount or 50% from this low, right? And it just continued to run higher, accelerating, not filling any of these fair value gaps, that it leaves as it makes its way up there until we get to this high here where it fills this one. And that's when it sort of starts to slow down and see lower pricing. So that's all. I hope that this was insightful and this might have inspired someone. And thank you very much for watching. If someone managed to make it the whole way through, that's awesome, and thank you very much.